Welcome back, guys. Johnny here, and in today's video we're going to show you how to start investing for beginners. Now, if you are a beginner, this is going to be a great video to watch before you start your journey into investing. And if you're not a beginner, it's always a great video to just kind of brush up on some basics for investing. So all I ask is you smash that like button and subscribe if you haven't already. So how to start investing for beginners can be a little tricky, right? When you first start investing, you're not sure what to do. It could be very scary for people who have never done it before, but it's necessary to figure out how you can take a hold of your financial security to create financial security and independence. Now, investing your capital is one of the best ways to grow your wealth over time. Whether you're saving for a particular goal, like maybe purchasing a house with a down payment or planning for retirement, this video is going to be a great way to showcase some of the main actions you should take as a new investor. The first main action you should take is determining your goals. Now, the first stage in any investing decision is identifying your objectives. What are you saving for? A down payment, a child's education, retirement. Knowing your goals will assist you in determining the best investing strategies and the level of risk that you can handle personally for your situation. Now, for example, if you're saving for a down payment on a house, you might prefer to invest in a low-risk investment like bonds or a high-yield savings account. Now, if you're investing for a long-term objective such as retirement, you may choose to invest in higher-risk assets such as equities, stocks, monthly paying dividends, real estate, etc. Once you've figured out what your goals are, then the second action that you would take for starting your investing journey as a beginner would be developing a plan. Now, after you've defined your objectives, it's time to devise a strategy. I love strategies. I love planning and goal setting. It is definitely beneficial when it comes to creating goals and being able to track those goals for yourself. The plan should contain your investment objectives, your approach and strategy, as well as what your risk tolerance is going to be. Now, your investment approach should be based on your goals and your risk tolerance. For example, if you're investing for a long period of time or long term, you might want to consider a diversified portfolio of stocks, bonds, and cash, as well as a little bit of real estate. This will help spread your risk and increase the likelihood of achieving your goals while being able to benefit from all of the diversification that you created for yourself. If one goes down, you have 3 or 4 more to fall back on. The third action step you're going to take is going to be to educate yourself. Now, before you begin investing, it's critical that you educate yourself on the fundamentals of investing. Thus why this video is titled How to Start Investing for Beginners, right? So you're already on your journey. If you're watching this video, you're already educating yourself on how to invest your hard-earned money more wisely. This includes knowing many different types of investments, certain risks and benefits of each investment, and how to construct a diversified portfolio over time. There are many ways to learn about investing, such as through books, online courses, this video, as well as podcasts, and even communities based around investing. Now, if you are just watching this for the first time, we do currently have a Facebook private group. It has over 70,000 members, created many years ago to help people just like you and me get together and share our ideas and strategies to help create more income and create more opportunity for our money to work harder for us. So if you want to check that out, go on over to investingforbeginnerscommunity.com. There you can sign up to our newsletter. You could also follow us on Facebook, Instagram, Twitter, and even Pinterest. Now, moving on The fourth action would be to start small. When you're just getting started, it's critical to start small. This means investing only what you can afford to lose. Take it as if that money is already gone and you're never going to see it ever again. Don't go spending your last $10 that you should have used for gas or food on an investment opportunity that could take years and years to turn into something worth selling or profiting on. Now, you can always expand your investments as you gain more experience with the process over time. Start with $5, $10, $20, whatever you're comfortable with, and then slowly increase that as you get more comfortable. Starting small also helps you to learn the ropes of investing without risking too much money. You don't need $20,000 or $30,000 to invest. You can start investing with as little as $5. Now, the fifth action step for any beginner who's starting to invest would be to choose your investments. Now, how do you choose your investments? Well, when you've set your goals, you've made a plan, and you've learned more about investing through educating yourself, now it's time to choose your assets. Now, this is the fun part. There are so many investing options available out there, including not only equities, bonds, mutual funds, and ETFs, as well as property investments. But then you also have these subcategories in each one of those classes, such as REITs, which is real estate investment trusts, which fall into real estate but also into stocks and ETFs. You also have options trading equities, which is a whole new way to benefit from trading equities and stocks. There's just a lot of investment opportunities out there. Not only does real estate traditionally, by buying a home, create wealth through rental income and appreciation over time, but you could also do things like Airbnb. You could rent out that house on the weekends. You could rent out a small room in your house, a garage space. The possibilities of investment opportunities around us is unlimited. I mean, there is an unlimited amount of investment opportunities. It's your job to educate yourself and figure out which of those opportunities are going to benefit you the most and create the highest return on your investment. The sixth action step would be to open an investment account. So now that you know what assets you want to buy and you've educated yourself, now it's time to invest in stocks, bonds, or mutual funds. But you must first open an investment account. And there are numerous types of investments accounts available. There's brokerage accounts, retirement funds, there's IRAs, there's 401ks, there's college saving funds. Your investment strategy and your goals and your plan should dictate the type of investment choice or account that you choose. Right now, you could sign up and get 20 free stocks worth up to $60,000 if you sign up with Webull right now with my link below this video, or in the article you're reading or listening to in the podcast. There'll also be a link. But there is a link below, and right now you'll be able to get up to 20 free shares. You could even do Robinhood. You could sign up with Robinhood. That's also a link below. I've invited you to join, and you can get a free stock worth anywhere from $5 to $200. And you're guaranteed stocks when you join. So just for signing up on Webull or Robinhood, you'll then get a free share or stock. Webull does offer 20 free stocks, and that will catapult you into your investment journey. Not only are you setting yourself up with a brokerage, but you're also benefiting with their program and referral program. By clicking the link below, you will get free shares, free money, which you can keep and hold long term and watch it appreciate and grow, or you can sell after the settlement period. Some of them are 3 days, some of them are 5 days, and you can use that money, pull it out, and never look back. Or you can use the money to invest in other equities and stocks. Now, if you want to check those out, again, I have links below to sign up. Now, the eighth action is, as a beginner investor, is to monitor your investments, right? It's critical to review your investments on a frequent basis. I do it pretty much once a day. I'll either look at it in the morning or at night. But it's okay if you pick a different frequency that you like. Now, it's important that you review your investments on a frequent basis once you put your money in, because this means that when you're checking your portfolio, you're checking the performance and you're able to rebalance your portfolio when necessary, and you can make adjustments as your goals and your circumstances change. Nothing is set in stone. It's not one of those, put money into Coca-Cola and hold it for 30 years type of things, right? Now, you can do that, and I'm sure there's people that have done that and have done well in the past, but the point is to monitor your investments, and that's just going to help ensure that you're on track to achieving your goals and that your portfolio remains aligned with what you want to do in your investment strategies. Maybe you want to take some of your dividends from Coca-Cola and move it into a new company that is a startup, or you want to put some money into an IPO, which is an initial public offering. Or you have a speculative stock that you're looking at that you want to see and run. Take some of your profits or add new money in and just diversify that portfolio. But know that nothing's set in stone. You can buy and sell any equity at any time as long as the market's open. And it's okay to rebalance and change up your portfolio as long as it goes along with what your personal investment strategy is. Now, the 9th action plan, and this is a 10-part, so there's only one step after this. The 9th step would be to stay the course. Now, finally, it's important to stay the course when investing. Now, this means sticking to your investment plan. Even when the market is volatile or when you experience losses, right now we're in a bear market. They're talking about recession, depression, but investing is a long-term plan. Thus, short-term changes are to be expected and can be somewhat scary at times. Staying the course and just remaining disciplined with your goals and with your plan will help you achieve your investment goals over time. Just stay the course no matter what. And guys, my final thought here, the 10th step to the action plan is just to repeat, right? Just constantly repeat these steps over and over and over. If you're investing and you're new, it's important to step towards achieving financial security and independence. But you need to start by determining your goals, developing a plan, educating yourself, starting small, choosing your investments wisely, opening your investment account, monitoring your investments, and staying committed over time will all help you to become a more successful investor. Now, if you guys are still interested in more about how to start investing, I have a free download available, which is my ebook, Financial Freedom Can Be Easy. It's a 10-step guide to help teenagers break the ties of the bank of mom and dad, or even just to help you start your journey into a more financially secure future. There's a free download. You have to sign up to the Investing for Beginners community. It is free to join. 70,000 members. When you join, you get a free ebook. Other than that, it is a $3.99 book through Amazon, and you could purchase it if you don't want to join the group. And if you're still interested in more videos and more content, check out any of my YouTube videos here, or there. And subscribe. Hope you guys have a great day, and we'll see you in the next video.